There is a growing sense of economic unease as signs of recessionary pressures begin to emerge. The speaker notes that the labor market is showing signs of softening, although acute recession indicators are not yet apparent. The delayed impact of a historical bond bear market is discussed, highlighting the underperformance of treasuries, reaching levels not seen since the time of George Washington. The speaker suggests that the current situation may be more of a rebalancing act by large portfolio investors. In the wake of a sharp sell-off in bonds, these investors may be inclined to adjust their portfolios, selling some of the highly performing stocks and leaning into the underperforming bonds. This rebalancing is attributed to the enticing yields that emerge as bond prices decline. Despite acknowledging the attractiveness of certain bond assets at these levels, the speaker remains cautiously neutral, pointing out the continuous challenges facing the bond market. It's worth noting that the speaker expresses a shift in sentiment regarding their bearish stance on bonds, particularly in the context of the recent sell-off exceeding their expectations. The recognition of a potential rebalancing act in the market adds a layer of complexity to the analysis. How this situation unfolds is seen as linked to the endless supply of deficits, with $1.8 trillion in growing deficits posing a challenge. The potential impact of a recession on these deficits is explored, with some components potentially easing while others exacerbate. The lack of a clear path to address these deficits in the event of a recession contributes to the speaker's cautious stance on the long end of the bond curve. The complexity of the situation and the ongoing fiscal challenges leave the market in a state of uncertainty. If you're an everyday American reading this, what are your thoughts on the economic situation described above? How do you perceive the potential impact of rebalancing by large investors on the market? Leave your comments below. Shifting the focus to the cryptocurrency market, the narrative takes a turn to discuss the soaring trends in the crypto universe. Bitcoin's dominance is emphasized, with a substantial market gain leading to a $1.4 trillion valuation. The speaker attributes this surge to a bullish trend that has been persistent throughout the month. Bitcoin is hailed as not just a trendsetter but the primary driver of the entire crypto market. The volatility in the crypto space is vividly described, with Bitcoin's wild moves triggering a cascade of liquidations. Over $37 million in leverage positions were wiped out in a 24-hour period, affecting over 8,000 traders. This market whirlwind is presented as a roller coaster ride of liquidations, showcasing the inherent risks and rewards in the crypto space. Who could have predicted the dramatic twists involving the SEC and Bitcoin ETF dreams? The potential approval of a Bitcoin spot ETF is discussed, with odds suggesting a 90% chance of approval by January 10, 2024. This development is seen as a potential game-changer for institutional Bitcoin adoption, creating anticipation among market participants. The roller coaster ride continues, weaving through economic booms, a growing U.S. economy, and the influx of cash into the crypto market. What's your take on the cryptocurrency whirlwind? Do you see Bitcoin's mainstream adoption as a positive development, or do you have concerns about the market's volatility? Share your thoughts in the comments. Now, transitioning to the topic of inflation, the speaker delves into the mixed expectations surrounding inflation. While break-evens are not notably high, the Michigan survey indicates a slight breakout in inflation expectations. The next 6 months are framed as a crucial period, dependent on factors like geopolitical events and the balance between recession and ongoing fiscal stimulus. For everyday Americans reading this, how do you perceive the inflation landscape? Have you noticed any impact on your day-to-day expenses, and what are your expectations for inflation in the coming months? The longer-term view presented by the speaker is anchored in the anticipation of another growth cycle. The recurring theme of inflation forces being present during growth cycles is emphasized. The speaker finds the current landscape less interesting in the short term, focusing more on the real purchasing power of long-duration bonds. The attractiveness of Treasury inflation-protected securities, TIPS, and energy stocks is highlighted as a conservative approach to navigate the current economic uncertainties. If you're an everyday American investor, how do you approach investments in the current economic climate? Are you more inclined towards conservative assets like TIPS, or do you see opportunities in other sectors? As the discussion extends to the potential economic scenarios, the speaker contemplates the likelihood of a recession. Drawing parallels with the 2001 recession, the speaker suggests that the current conditions may lead to a milder recession due to the tight labor market and ongoing fiscal deficits. The term emerging market landing is introduced, emphasizing the unique characteristics of recessions in emerging markets. The interplay between loose fiscal policy and tight monetary policy is depicted as a delicate balance, contributing to a stall speed in the economy. What are your thoughts on the potential for a recession? Do you see parallels with past economic downturns? And how do you perceive the interplay between fiscal and monetary policies? In conclusion, the speaker expresses a nuanced perspective on the current economic landscape, acknowledging the intricacies of rebalancing, cryptocurrency dynamics, inflation expectations, and the potential for a recession. The delicate equilibrium between fiscal and monetary policies adds complexity to the analysis. Disclaimer: the information provided above is for educational and informational purposes only. It does not constitute financial advice, and readers are encouraged to conduct their own research and consult with financial professionals before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.